Behavioral economics is an emerging field, combining economics and psychology, to understand how consumers make decisions. Behavioral economics focuses on cognitive and emotional biases, which affect consumer decisions, such as loss aversion, confirmation bias, and the influence of emotions on decision-making. Confirmation bias is a cognitive bias, which occurs when people search for, interpret and remember information in a way that confirms their pre-existing beliefs, or previous hypotheses, while ignoring or minimizing information that contradicts their beliefs. That is, people have a natural tendency to seek out information that supports their opinions and to dismiss or minimize information that challenges them. Another important aspect of the relationship between the economy and consumer behavior is the impact of technology and innovation. Technology has changed the way consumers interact with businesses, and they have changed the way he makes purchases. Innovation has also led to the creation of new products and services, which has changed consumer preferences and purchasing decisions.